Hi guys, welcome back to ValeTalks with Valetax. My name is Ryan Ifere, and it's been a minute since you've seen me on your screen. I've been down a bit, but I'm back active and live with you guys. Today we're going to be talking about something very interesting, which is trading like the banks. Is it really possible for retail traders to trade like the banks, or is it just another facade to have traders come into the market and buy different courses and different strategies, thinking they're going to be profitable only if they trade like the banks? And with me, we have Manesh Patel and Syukri. So I would like to introduce Manesh, who was your host last week, and I'm sure he did introduce himself very well, but I like to introduce him because he is our big daddy and big brother, right? So Manesh is
Yeah.
a CFT engineer and with over 30 years experience in the financial markets and trading world. He's traded with banks, institutions. He's built an algorithm that helps traders achieve trading profitability. And he's also worked with institutions to build the black box trading system. Thank you very much, Manesh, for being part of ValeTalks today. And I have with me Syukri, who is a global market analyst at Valetax with over 6 years trading experience. He majors in trading XAUUSD, metals most especially. And then myself, my name is Rion Ifere, and I'm a global market analyst at Valetax with over 6 years trading experience. And I major in sentimental trading, that is pairing fundamental analysis and technical analysis to inform yourself and create bias around the market. But let's head right into the charts today and talk about what trading like the banks really is. And we have Manesh, who obviously has, been the insider and the outsider. And currently, he's just traveling the world and enjoying trading as a retail trader, and also helping, most importantly, young traders and struggling traders to actually attain profitability. Manesh, do you think that the concept of trading like a bank as a retail trader is true? First off, let's start if the statement is true.
Well, I mean, you have to look at that statement in detail. Trading like a bank. I mean, really,
Mm-hmm.
you really banks are day trading? No. I mean, the only thing they're doing is currency exchanges and people traveling this and that. But banks are pretty much holding long term, just like institutions.
Right.
But on the side of more day trading, you probably have more black boxes, more automated strategies. Autobots are trading more day trading than
Right.
the banks are and institutions. So, but as a trader, you need to forget about trying to be like someone else, and you need to find your system that suits your personality,
Yeah.
and with that flow. And, some people are meant to day trade, some people are not. Some mental people are meant to be swing traders or long term. So you need to figure out first what your personality is and go that route. And then look at the charts and you could see what the long term positions are and get on that ride. So, I think retail people have this concept of, oh, I want to trade like this institution, like this bank, this.
Yeah.
You need to forget about all that and just start to trade, learn how to read the charts and trade what you see on the charts and go with the flow. Because you're never going to know what banks are really doing, or institutions are really doing. The only way you can really see what they're doing is from the charts and looking at it from a long-term perspective, and then trading the smaller time frames for the big time frame wave.
So would you then, from what you said, is it fair to then say that ICT, smart money concept, and Wyckoff, and all of this, trading methodologies are just shams?
I'm not going to say they're shams. Everything has its little role and everything, but I mean, I could tell you I've spent over $500,000 on education alone. You come to my house, I could give you a whole conference room of books and things I've taken from Wyckoff method to various indicators from Bollinger Band, to market
Yeah.
indicators, Elliott Wave, Fibonacci, Ichimoku, everything. And, you know, everything has something special. You just got to figure
Right.
out what it is. So there's tons of indicators out there. Which one works for you? Which one makes sense to you, right? And we've talked about this here is, find something that suits your personality that you relate to, and then back test it, make sure it works in the past. If it works in the past, it's got a high probability to work in the future. If it doesn't even work in the past, there's no way you're going to see success going forward. My path was very ugly. I went down moving averages, MACDs, RSIs. Then I got into pivots. Then I got into Fibonacci, Elliott Wave, Ichimoku, and all that. And give you
Right.
perfect examples. When I learned Ichimoku, I dropped everything that I had learned up to that point, and I was not successful. Ichimoku by itself really did not make me successful at all. So then I started bringing back all the things I've learned in my journey and started bringing in some concepts with Ichimoku. And at that point, I started becoming successful. So,
Okay.
it's a lot of things you've learned with time to bring together to come up with a complete system. It's not one individual thing at all. So like we were talking earlier on Bitcoin going down, down, down. It's at a major support level. You're thinking it's going to break. I'm thinking it's going to go up. We have two different perspectives, right? So, the key is, if you think about trading and technical analysis, all these indicators serve one thing. They're trying to help you find the key support resistance levels. And key is the key, right? And that's the levels that institutions, banks, and so forth are looking at. So, you need to find these big levels that banks, institutions are looking at, and because that's the critical decision-making points, and then trade around them. So from that perspective, you look for major support resistance levels from a higher time frame perspective, and that gives you an insight of what banks, institutions are looking at, and then you trade around that. So that's my perspective of it.
So the reason why I asked that question, yeah, Syukri, is when we think about smart money concepts, right, and ICT and Y curve, the bulk of the first-hand understanding, or first meet understanding that retail traders have about ICT, smart money, and Y curve, right, is they're taught about their trading like the banks. It's where the whole talk about it on the social media is coming from. Like, they always say they're trading like the banks. So really, the question is, are they really trading like the banks, or are they just showing mechanics and systems in how these institutions and banks kind of think when it comes to liquidity in the markets?
Okay, so first of all, I totally agree with what Manesh have explained earlier. It's yep, that's a massive I can say experience wise that he's been sharing. But come back to the question where why retail traders are so obsessed with trading like banks is, like you said, because of the rise of SMCs and ICT, smart money narrative, retail frustration with conventional indicators as well. So I think every generation of traders is basically looking for a secret, because today's secret happens to be called smart money. So that's the secret. But basically, can retail traders actually trade like banks? I don't think so. I mean, my take, I not literally, I can say, because why? Because banks, they have, like you said earlier, they have their machines, their order flow, visibility, research departments, they have all these economists, quant teams, massive capital, and also different objectives. Like for example, sometimes when a bank is buying let's say Euro USD, so most of retail traders assumption will say, okay, they are going to go bullish. like a lot of Telegram channels, they promote this this narrative trade according to bank signals. So actually, in reality, I think they may simply be hedging exposure, instead of just looking at one direction. Just because the bank buys, it doesn't mean that they are trying to make money from the move, right? Yeah. So that what actually the banks really do is where you know how many retail traders actually know what the bank's traders job looks like. So it's actually it's just more an imaginary, like what they
Right.
visualize on the secret indicators, their hidden charts, their holy grail kind of things, institutional setups. But what actually banks really care about, from my point of view, is actually, I mean, it's it's more on risk, like what you said,
Right.
Manesh. It's more on liquidity, client
Yeah.
expectation, sorry, client execution as well, and also exposure on management exposure. So banks
So
are actually not really professional predictors as well. you know
yeah.
Not right,
Look
yeah,
at
they are professional
So
risk managers.
so
Bank of
in
Japan.
in right,
Everyone's trying to always predict what they're doing.
Yeah.
right. So it means that at the end of it, right? It means that retail traders who think they're trading like the banks are only basically trading someone's someone's research on how markets moves,
Mhm.
not necessarily trading like the bank. Because if we're to conceptualize the word trading like the banks, the word trading isn't necessarily just about the analysis. It's the analysis and the execution that makes it trading. So
Yes.
if we are not fully executing like the banks, how then can we say we're trading like the banks? So
Yes.
more or
Yes.
less, we're just trying to use the mechanics of how to view liquidity, right? And probably their other books and all of those things and include them into a technical analysis, but we're not really trading like them. Because like Manesh rightly said, the banks do a lot of machine trading, a lot of algorithmic trading. Yeah, they have
Mm.
systems that does the day-to-day trading for them, and we know these are like high frequency trading algos that do this trading. So we as retail traders are not even allowed to use high frequency robots on brokers. Brokers don't allow you to use high frequency. Even some hedge bots are not also allowed. So we can't really say we're trading like the banks. But for future understanding as to trading like the banks or trading like institutions, what can retail traders really do to further, hone their skill as traders and also have an understanding of how institutions operate? Because for me, I usually don't say banks or institution. I just like to say smart money. Because why I choose to say smart money is banks, institutions always have smart money intels within their team. Their research team are not dumb money, right? These are people who are, highly analytical. The trading department are filled with people who are not just traders, but are risk managers. And risk managers are smart traders, right? They're smart individuals. They're not just jumping on every trend or every train. They're more or less paying attention to risks to rewards, timing, seasons, and all of these things. So I prefer to say trading like smart money rather than saying trading like a bank. But like I said, for future references, okay, how do you explain to a retail trader how banks and institutions operate and how that affects his or her trading?
I mean, I could sum this up very fast. And, I've
Right.
been teaching years and seen a lot out there. If you
Yeah.
want to be a trader, you need to stop listening to the news, stop looking at internet, stop listening to all these other people's views and stuff like that. Just shut
Yeah.
everything down. Go to a chart, put $50 to $100 into an account and trade. Just trade. You're gonna learn more in just trading a chart than listening to
Right.
anything on it and trying to be like someone else. And believe it or not, you learn from your losing trades, not your winning trades. So you've got to just trade. You just got to put money into your account, whatever you're okay in losing, and put it in and just start trading charts and learning from your losing trades. And that's the only way you're going to get there. I didn't get there from my winning trades. I got there from my losing trades and understood why I lost. When you understand why you lost, then you're going to be able to move forward. But until you
Right.
start trading, you're never going to move forward. And you just got to shut down the internet, shut down everything out there, and just trade.
Yeah, totally agree with Manesh, because if for what actually retail traders should actually learn, I think it's not, if I had to learn one thing from the banks or institution, right? I think it's not actually liquidity grabs.
Yeah.
It's more on just trade and learn how to propagate your risk management. You know why? Because institutions, they survive. Many retail traders only focus on entries, but uh, whereas institution, they focus on exposure, kind of position sizing and the risk limit. So I think just trade, like what Manish said,
Yeah.
and just learn how to uh, delegate and actually organize your risk management. I think that's the best way. There's no really such secret into it. So just don't get trapped, but somehow rather once in a while you will do get trapped, like it or not. So yeah, it's just how you manage it.
So Manesh said something that was very interesting. He said you will learn more on trading on your charts than you would on, trying to learn on social media. And
Mm,
I had a mentor, not a mentor, a mentee rather, 2 years ago. And I told him, I said, no social media. Open your Instagram and unfollow every trader you know, including myself. I said, every trader comes online and posts something that interests you. It's not necessarily to bait you, but you need to understand that people post the best sides of their lives, not the worst sides of their lives. And there's also a conception that when people post the worst side of their lives, they're either looking for pity, validation, or assistance, right? So there's no trader. When you say the word trading to anybody, the first thing they think about is greenbacks. They just see you and they just hear ka-ching. But trading is different from that, right? It's harder. It's not the most consistent, right? No, it would say it's consistent, but it's not the most linear job, right, in the world. It's consistent, but it's not linear. I mean, there are months where you're going to go off on your P&L. There are months where you're going to do 3 times better. The market isn't your footstool, right? At some point in time, it's going to teach you that everywhere you march is going to hurt sometimes, and sometimes it's going to be a smooth sail. So a lot of retail traders, like Syukri rightly said, are just looking for a holy grail. And somehow, hold me in contempt, right? But ICT has kind of bewitched everybody in the foreign exchange market right now. I don't know what Michael Hodgson, I think it's Hodgson or Huddersfield as his name, has given to every retail trader. But everybody believes right now, if you're not trading ICT, you're not a good trader. And I have seen likes of Manesh make money off just support and resistance. And it wows me because he's not trading. He's not doing my liquidity grab. He's not doing New York session opening breaker block. He's not doing all of those things. He keeps it simple and still makes money, right? But like he rightly said, the most important thing is what you learn on the charts. Because what keeps you profitable and makes you profitable in the market is finding an edge. And how to find an edge isn't by using different strategies, is by your ability to recognize something that has occurred over time. Isn't that the reason why we backtest? That's the sole reason why we're always backtesting, is us trying to build off chart patterns, market movements, prices, and historical data and bring them into the future or into the present to make an analysis over them. So if we are to say we're trading like banks, number one for me would be liquidity. Do you have enough liquidity to trade like the banks? Do you have a high frequency engagement to trade like the banks? Do you even have access to Bloomberg's portal? You know, Bloomberg has a portal, right, that gives data to institutions before they're released to us in the public. I think is about, 5 minutes faster than we get them, right? And all of these things, Bloomberg, Forex Street, all these people, they have a separate portal that delivers news faster than it gets to us. You don't have access to all of those things. So trading like the bank will really mean that you have a lot of, technology, systems, mechanics in place that allows you to trade that way. So I personally don't agree to the term that retail traders can trade like the banks, but I can agree and say that with a couple of strategies out there, like I said, ICT, SMC, Wyckoff, it has kind of built, technical understanding of how prices move on the charts and how these algorithms play their day-to-day trading, but it still doesn't set you apart. It doesn't take you away from the risk. You never know what the algorithm wants to do. You never know when it's changed from inside. You never know when Manesh makes an adjustment to the black box. You can't tell. You just wake up one morning and, he's added something to his Ichimoku cloud that gives him 3 times precision, and his algorithm decides to take a trade. So I do not agree with, with the quote unquote retail traders can trade like the banks. Manesh, you have something to say?
Yeah, let me give you 2 remarks. So you mentioned ICT, right? Right?
Yeah.
Honestly, until today, I have no clue who they are, and I still don't. I don't even, I've tuned out. I don't listen to any of that stuff,
Right.
or what they're doing or anything. So until you mention them, I have no clue who they are. I can tell you one thing. So, I was a retail trader. So the dream always for every retail trader, especially in the US side, is to go work on Wall Street. In 2007, I had leap and I went to go work in Wall Street. So I went in with having computer programming knowledge, technical knowledge, all this technical systems, everything. I went to go work in Wall Street, manage money in Wall Street, and then took over as CTO. And I thought this was the dream job, right? I'm gonna learn so much stuff there. I went in on the notion that robots, automated trading is the way to go for the future. I left in 2010 for a reason. I realized one thing: you can't replace the human brain. If you look at all the robots and everything out there, they give you an average 1-to-1 reward risk ratio. You're gonna very hard to find a strategy that's automated, on a full scale, that's gonna give you more than 1-to-1 reward risk ratio. With the human brain, you could get more than that. You could get 3-to-1, 5-to-1, 10-to-1.
True.
If you're, and so in taking consideration my background, I'm an engineer. I've been programming since I was 14 years old, know all the technical systems out there, everything. With all that knowledge, I went in with the idea that computers are the way to go, automated strategies are the way to go. I left knowing that you can't replace the human brain. And learning from the charts is something critical because they're going to keep on changing. So even if you do create an automated strategy, you have to keep on adapting to it. And if you don't look at the charts and everything, there's no way you could adapt at all. So, for all the people out there, stop listening to the internet and just start trading. Put some money into your account. Doesn't have to be much. You could start with very low amount. Valetax allows you to put very small amount into the trading account. Put some money and just start trading. That's all you just need to do. Learn from trading, real life experience, not from books, internet, other people, or anything. In fact, I could tell you right now, we have algorithms right now that I search social media and I find out what the buzzwords are. And if you look at my social media, there was a perfect example is crypto. XLM USDT and XRP, Ripple USDT. Social media was ramping these things up, saying, hey, Trump's now these are gonna be the de facto for trading because
Yeah.
Iran start charging oil and all that. They're going to start taking Ripple and all that. These are going to go up. So I kept on looking at XLM and XRP on the crypto space. I saw XLM go up. I posted on social media the short-term trade. But at the same time, I'm not following the crowd. I know that this is going to be hyped and then it's going to go the other way. So I always was looking for short trades. So once I took profits on my bullish trade on XLM, I started looking for bearish trades because sooner or later, everyone's reading on this and it's going to go the opposite way because everyone's following the crowd. And
True.
last week, Ripple XRP gave me a signal to go bearish. And I took it coming all the way down and took crypto coming down. But if you follow the crowd, you're going to lose, right?
Very well.
So if you do all that, this, that, the banks are doing this. If you hear it on news, it's too late, and you should start thinking opposite.
Talking of crypto, right? We were talking about BTC earlier on, and I was, sharing my insights. And from the insight I was given, I was basically using, the smart money perspective again, right? Which is how I just, would I use the word think or understand, of how, investors think, right? Investors never like high prices. Even if we say BTC is going to go to $1 million, which of quote unquote is just market gimmicks, right? We have no reason for certainty to think BTC should get to $1 million. And another thing I think people need to understand is with the involvement of governmental organizations, right? You don't have so much. We're going to start to see a lot of control over these things, and involvement means that there could be regulations. Regulations means that there's going to be a whole lot of fundamentals. Fundamentals mean that you no longer control the markets. When you no longer control the market, it means you're only a shareholder in the market at this point in time. Crypto for a long while was just based on it's should I say its autonomy and people moving the market, right? Supply and demand basically was just it. But by the time we start to see a lot of adoption, regulations, it's not just going to be supply and demand again. It's going to start to feel like some level of conventional, financial currency, right? Because now if it's regulated and something happens, the fundamentals are definitely going to shake the markets. So with all these thoughts all around in my head, I'm thinking, definitely, if we're going to get governmental organizations into the market, they're going to definitely want to have a reserve of these things, meaning they're going to want to hold a certain amount of supply of it, right? And they're not just going to want to hold small amounts of the supply. They're going to want to have a chunk of it. And we're not just talking about the US government. We've seen the EU starting to accept cryptocurrencies. We've seen Bitcoin.com finally starting to give out, Bitcoin to fiat cards to its users. So you could use your Bitcoin.com card, your Crypto.com card anywhere in the EU. And all you have to do is just buy, and it changes from BTC to fiat for you directly. You spend already in the EU. So we're seeing a lot of adoption. Now, if these institutions and, all of these people are going to come into BTC, I, for one, believe they're definitely going to want to get them at a very cheap price, as cheap as possible. 60K is good enough, but no one's trying to buy 20,000 Bitcoins at $60,000. No one's trying to buy 10,000 Bitcoin at $60,000. I feel it's still overpriced. So hence why one of my reasons to why I think BTC is still going to fall below 50,000. So my friends, I already called BTC shorts from 110,000. They like to call me the prophet of doom. I'd love to see when the markets are bullish and bet against them. I bet against XAUSD. I think, Manesh, you were present when I bet against XAUSD to start selling off. So they like to just call me the prophet of doom. So when BTC started crashing back from 74,000, they were texting me, I say, you're a prophet of doom, and everybody who bought BTC at 70,000 is crying. I'm like, it's just very obvious sometimes, right? The market is not linear, and I always say it doesn't just go one direction. It's never moving that way. So talking of crypto, we've seen BTC already starting to show some, bearish momentum, right? And we still have the 63,000 level holding it strong. We've not fallen below those levels, right? Do you think it's going to affect altcoins? Looking at likes of them, XRP, we have Ethereum already back at 1,500, 1,300 thereabouts. We're seeing Solana. Solana is dipping aggressively, even more than most of the altcoins. And I think it's also an opportunity considering the ecosystem around Solana. A lot of people are thinking of, wanting to buy Solana more at cheaper prices because the bulk of the gas fee in the Solana ecosystem requires you to have Solana. So buying cheaper at this period is the best bet for them. But in everything happening currently, do you think one of the major causes besides that is the return of strength to the greenback? We're seeing the US bonds and yields appreciating, a possible interest rate hike coming this month. What do you have, around that? I know you're not much of the fundamental person, but I still want to hear your view.
I mean, there's a lot you talked about there, right?
Yeah.
My screen real fast?
Yeah, sure. Please do.
So I'm actually contrary. Everyone, can you see my chart?
Yeah, I can.
Okay, so this is just a simple monthly chart, Bitcoin. You can see here we were going down, and then you have here, there's this low here. If you look at it here, that's a major, major support around 59,434. And if you look here, when we bounced off here, this bar still closed bearish. So it still had a high probability to come back to this level here, which we were expecting, okay? And so we did trade 65,000, we traded it up, and then we got out here. But if you look here, what happened Friday, we got to that level here and we touched it, okay? And then if you look at it, we bounced off it. If it was going to break that level, it should have broken on the next bar. When you tested it here, the next bar should have broke it. It didn't do that at all. So when it didn't do that at all, this bar right here was critical. It did not break that level at all. That told us that this level has a high probability of holding. So then what we did was we just put an order out here with a very tight stop and assuming that it's going to give you a double bottom off a 4 hour, and that's exactly what it did. So we ended up buying here for a double bottom here because it held here with a very tight risk here. And then our goal was to get back to here because this is the downward movement here. So we took some profit here. Now we're looking for it to break this level. If it breaks this level, this could be the bottom here for Bitcoin and for it to start going up. This is this is the consolidation pattern now that Bitcoin is going through. And if you look here, we tested it here. We're slowly still trying to break this level. If we close above this level on the 4 hour, Bitcoin could start to go up, believe it or not. And
okay, so when you say Bitcoin, okay, sorry, when you say Bitcoin going up, right? How far up are we talking about? Are we talking about the bounce back of Bitcoin back into 100K, or are we just talking mid-term bullish Bitcoin?
No, I mean, if you look at it here, you have to look at it step by step, right? The whole thing went down this much here, right? And if you I'll give you Fibonacci, that's the easiest way here. Let's just say you draw Fibonacci from here to here, right? And from here to roughly about right here, right? Yeah. So this is the first level here. We're really looking at for it to come into this level here, this is really where the second phase went down. This is the first leg, it was a second leg here. So our goal is if it breaks this level here, we're looking to take our profits here, which is typically the 50% movement here, 50 to 61%, right? Yeah. So that's where the profit taking is going to be. If it breaks that level, then it could retrace the whole thing. But we're not thinking long term at all right now, and you can't, especially with the move it's made. You got to start thinking short term. And the only reason why we're thinking that it can bounce long term is if you look at the long term view here, the monthly time frame, this is the most critical level here that you've ever seen in Bitcoin. And this is during high level here. And if you break that level and you look back at time, look at this here, held it, held it, held it, went above it, held it, held it, held it. You break this level where you close below this level here on a monthly time frame, watch out, because then it comes crashing down. So this is level here. If you look at it here, it's been holding since 2021 to a point. This is the critical institutional level here, and it's worth taking a risk buy here, right? And that's what we're doing. So we took the risk here to buy here with a very tight stop, which we have no issues at all. But it does have a potential to bounce off there and start to come back and get into the 80,000 levels and so forth if it starts breaking these key critical levels going up. And the 4 hours is going to control this, believe it or not. And you can see it right now, it's hesitating at this level here, right? Now, this is Bitcoin. So to answer your other question, you said, how will it influence altcoins? A lot of people associate Bitcoin affecting altcoins and vice versa. Sometimes that relationship exists, sometimes it doesn't, right? So you have to look at each individual altcoin and see how they're holding up and stuff like that. Before Bitcoin started going down, you start seeing some altcoins going down, believe it or not, ahead of Bitcoin. So, you know, some altcoins are holding their ground. They haven't really gone down that much at all. You know, I think you said Solana was one a lot of people are looking at, right? So there's Solana here, this went down. So you just have to look at each individual altcoin or crypto coin and see what's going on and behind the scenes and see if it's related to Bitcoin or not, because correlations come and go at will, so you have to be careful with them. But, you know, like here, we're in Ripple, we traded Ripple short, and we pretty much took everything off here when it came down here, and you could see the consolidation pattern here, and now it's gone up. So you could see a lot of these coins now are critical resistance levels. So they establish a temporary bottom right now, and they're at the first resistance level. If they break that resistance level, now they could get to the second one, which would be here, and that's going to be the critical decision making. Because believe it or not, it always takes two supports or two resistances to start trends. So the first one's going to establish the bottom, and then the next support will establish the trend going up. So we're at that stage of the second one and what's going to happen. So can't really say it's bottomed out yet, but if we break this resistance level, then there's high probability it can be a bottom. But either way, for us, it's not a big deal because we already took some profit already at this critical here, on Bitcoin. And then now the rest of our positions are pretty much at break even. So we have nothing to lose at all going forward.
Right.
So,
I mean that's valid. So because when you look at my analysis, right, my analysis is more overall long term, like what I view on BT. 2-3 years, right? So that's my exact view on BTC. Isn't just short term, but in short term view, I do agree with you on the bounce back. I am expecting prices to bounce back into this area here. So this was the key area for the buys. Yeah, I think even I and Syukri saw this earlier. This was like the key area for where BTC kept rotating around. So we had more sells here, acted as a resistance at the 71,000 point, and then we just slid through it. So I'm actually looking for prices to come back to the 69,000, 70,000 levels before any continuation of the sells. And I said I was going to point it out to you because I know you're more of an Ichimoku person and more of a moving average person. But we kind of, I think Ichimoku and the moving average kind of have the same yardstick to them. Under the Ichimoku, under the clouds, you would be bearish. Above the clouds, we're bullish. We're currently just crossed under the 200-day moving average for the BTC USD that we haven't done in over 3 years. The last time we were below the moving average was in 2022, and we currently are under the 200-day moving average with that retest at 80,000. You could see this, my markup here was to bring prices back to 80,000 before the sales, and that was exactly what happened. So I'm looking for the retest of BTC buys back into the 200-day moving average on the 4-hourly to confirm the start of those sales back at the 68 to 71,000 levels again. So that's just what I'm looking for. So buys on BTC USD midterm, I would say very much valid. But if prices fail to close above 74,000 again, then we're probably just going to see more sales coming to the BTC.
Yeah, and if you look at it from an Ichimoku perspective, right? The 1 hour price got above the cloud. If we were going to continue to go down right now, you never would have got above the cloud on the 1 hour. Because the 1 hour is the bridge between day traders and swing traders. So
and swing traders.
Yeah, so by getting above the cloud on the 1 hour, you now have a high probability of a double bottom, believe it or not.
Right. Well, that's my base for the BTC USD. And I think that's about the analysis I have on BTC USD. But for our traders today, I'm just looking at the XA USD. All the markets are kind of in an intra-week correction, an intraday correction. So we're going to see corrections on the market before Wednesday, where we have the core CPI, which I, of course, am expecting to see possible steady inflation numbers for the consumer price, but higher inflation for producer due to oil price surges. So I think we're going to see continuation of higher prices for producers. And then they've been doing the best to keep prices steady for consumers. So it's a bit of a tricky one for the Feds themselves, but I'm hoping to see how they tend to manage it next week with the FOMC reports coming up next week. But hopefully, let's see how it all pans out. And to those of you watching at home, I hope you've been able to enjoy the session for this week and you've had the best of it. I mean, no trading opportunities were given, but if at all you would want to, be on any side of the market as of today, I would say to hang on because it's Monday and the markets are a bit choppy this morning, considering the fact that we've seen Iran completely ban the second strait for shipments of oil and still not having a good negotiation, even after 100 days with the negotiations happening between them and Trump. So we want to go easy on the markets until maybe midweek by Wednesday when we get the CPI data reports. But with that being said, I hope you've had a beautiful time and I hope you trade smart and trade carefully with ValeTalks. If you're yet to open an account, it would be important for you to click the link in our YouTube bio or our Facebook bio to get registered and just make an initial deposit of $1 to get started trading with ValeTax. And until next time, I'll see you guys on ValeTalks with ValeTax. Thanks for coming on the show today, Syukri and Manesh. I hope to see you guys next week.
My pleasure, guys. Thank you so much for having me. Thanks a lot, Manesh, for the sharings and also Rion. That's a powerful insight. Thanks a lot.
Thanks so much, Syukri. And
thanks, guys.
All right, bye, guys. Bye, Manesh.
Take care. Bye now.
Yeah.